Good morning and welcome to The Street on BNN Bloomberg. I'm Roger Peterson. Thank you very much for joining us. Coming up on the show today, Jeff Hall, Senior Financial Advisor at Manulife Wealth, will be joining us for the hour. Then in 30 minutes, Pedro Antunes is the Chief Economist with Signal 49 Research. He'll be joining us to set the stage for a busy economic day with both the Bank of Canada and the Fed south of the border announcing rate decisions later today. And of course, we want to hear from you this morning on First Call. Reach out with your questions on large cap American and global companies. We'll have Jeff answer as many of them as he can at the end of the show. The number to call, 1-855-326-6266. We'll open the phone lines in about 30 minutes. Our email address is firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. The Bank of Canada will announce its latest decision on interest rates this morning. The bank is widely expected to hold steady at 2.25%. Since October, the BOC has said borrowing costs are in the right place to support an economy impacted by U.S. trade policy. Now the war in the Middle East has added inflation risks and uncertainty globally. However, analysts are saying it is likely too early to signal any new direction. Trans Mountain is planning a series of expansion projects for its main pipeline. The government-owned company says this will allow crude oil to flow faster and tankers to carry more volume by 2027. Trans Mountain says it already exports 60% of crude by tanker to Asia, adding the war in the Middle East and the U.S. military action in Venezuela are making the pipeline more valuable. Lululemon is forecasting a second straight year of profit declines. The retailer also reported a 4% drop in fourth quarter revenue in the Americas. The Vancouver-based company has recently been facing backlash for poor quality clothing, and sales have been hit by increasing competition from newer brands. Lululemon did not announce a new CEO, but added the former Levi Strauss CEO to its board. And now our top line story. U.S. President Donald Trump says America no longer needs allies' support in the war with Iran. The president justifying the U.S. and Israeli war in Iran as he faced his first public defection. CTV's Joy Melvin has more.
Thank you very much for being here.
Greeting the Irish Prime Minister in the Oval Office, President Donald Trump lashed out at NATO and U.S. allies for not joining the war against Iran.
I think NATO's making a very foolish mistake, and I've long said that, I wonder whether or not NATO would ever be there for us. So this was a great test, because we don't need them.
As his top counterterrorism official just quit publicly, a stinging resignation. Joe Kent posted on X he could not in good conscience support the war, saying, Iran posed no imminent threat to our nation, and it is clear that we started this war due to pressure from Israel and its powerful American lobby. A shocking surprise among the president's loyal ranks, Kent openly questioned the president's judgment.
He was weak on security. It's a good thing that he's out, because he said that Iran was not a threat. Iran was a threat. Every country realized what a threat Iran was.
The president praised his Arab allies taking the brunt of it after most NATO nations bowed out. France's President Emmanuel Macron said, France did not choose this war. We are not taking part in it. And from Britain's Prime Minister,
we will not be drawn into the wider war.
Trump wanted their help to safeguard the Strait of Hormuz, but it's risky. With tankers on fire, Iran has blocked the critical waterway for oil, sending gas prices soaring. Trump grumbled.
Everyone agrees with us, but they don't want to help. And we as the United States have to remember that, because we think it's pretty shocking.
The president's pressure campaign on allies so far coming up empty. As for his timeline, Trump said the U.S. is not ready to leave Iran yet, but will in the near future. Joy Melvin, CTV News, Washington.
All right, for the latest on the conflict and its impact on the markets, let's bring in our guest for the hour, Jeff Hall, Senior Financial Advisor at Manulife Wealth. Jeff, thanks as always for joining us. And I know you've been following this with great intrigue.
Absolutely.
It is a chess game going on out there.
Yeah, I'd say it's three-dimensional chess. I don't think people realize the layers and levels that are involved with this. And kind of for fun, I'll mention something interesting is that this isn't really just about Iran. This is about checkmating China. Because you got to remember, they have 3 gas stations, I call them, of the world where they get their oil. And again, oil isn't just for transportation. It's in plastics and the products we have, like your glasses and contact lenses and mascara and all the stuff that oil's used for every day. But in relation to China, as an example, when they took Venezuela off the table, that was the number 2 place China got their oil from. So that's now taken off the table for China. Now you have Iran getting taken off the table, where over 90% of Iranian oil went to China through the back door for about $17 a barrel. That stops. So now China's left with just Russia as their gas station, basically. So this is really putting China in a corner, because China was trying to take the U.S., a dollar kind of off the world stage for a lot of their kind of friendly countries to try to weaken America. So this is quite a flex by Trump. And what he wants to do here. And then obviously Russia's part of the game too. They're not going to get their Shahad 136 drones from Iran now for the Ukraine war. So that's going to help the Ukrainians. So there's this whole interconnectivity going on with oil and transportation and drones and who's friendly to who. It's getting, like you said, it's a chess game.
Now, but is the oil not still getting through to China, though, at least from Iran? I mean, that they're allowing tankers to go through. They're allowing Iranian tankers and certain tankers to get through. Yeah, it's a bit of a trickle, though. So they're trying to allow some ones to go to India, to China, to still get that, because you don't want to have the global economy screeching to a halt. But there's about 20% of the world's oil travels through that Hormuz Strait that is pretty tight at its tightest point. It's about 17 miles to 22 miles along that strait. And the channel itself is even narrower. Yeah, and you can't. It's not like you can maneuver there. Yeah, you can't like hug the side of the Saudis or whatnot. You have to kind of go up the middle because of the depth of it. So you're kind of limited, and you're a moving target, especially at night. It's very tough. Now, what about today? There are reports that there was an Israeli airstrike on the oil field that's shared by Iran and Qatar. What does that do now, if that turns out to be the case? Yeah, they got to be careful with their bombing. One of the things that Trump got pissed off already a few times with Israel is when they go on this adventurism, start to hit certain oil infrastructure. Trump wants all the oil infrastructure left alone, even Karg Island. Well, he showed that on Karg, right? All he took out was, from what we know, all he took out was military. I think he took everything all the way down to bicycles, I think, on that island, but left all the infrastructure in place, because his hope is when the Iranian people, 90 million people, most of which want to get out from under this regime, hopefully take back their country, they want to be able to start pumping oil. And selfishly, that also helps Trump, because he's got his midterm election in November. He needs prices of goods and inflation down. He can't have oil up where it is suddenly now. He needs that down. And if they actually can produce excess oil and push it out into the world, that'll lower oil even more, helping Trump possibly look a little bit better come the midterm elections, with people a little more walking around money in their jeans to feel a little bit better about possibly electing Republicans back into the House. Yeah, he really needs this resolved before then. Yeah. If he has any hope of holding on to the House. There was talk even he could lose the Senate too, at which point he's essentially neutered. Yeah, the last 2 years would be impeach every day, and then Congress would just zip up the purse strings that fund all of his adventurism and things that he wants to do. So he's very desirous to have his last 2 years to affect change. Yeah. If he's just a puppet for 2 years, he's just going to be a target for them. So he's desirous to win that election. In 2 years of Trump as a puppet, I'm not sure I can handle. But so the markets have been, this week is actually, there's been a rally going on, and oil's kind of just dancing along. It's up one day, down a little on this. What's driving that, do you think? Well, part of it is, you got to remember, Iran was really an isolated empire, this Persian empire, unto itself. For 47 years, it was a major agitator to the region. It's a different religion than most of the countries that surround it. The surrounding countries are all Sunni, as an example. So you don't have this interaction with Iran very much. I've never been to Iran. It's not on my bucket list of vacation there, as an example. Years ago, they were offering free flights. That is true. Tourists. Yeah, that's true. 15 years ago, because they were trying to get tourists to come over. Yeah, anybody, random thought. Anybody to go there. But so the reality is it's a difficult situation. And so it's not like Canada wasn't doing commerce with Iran. Most of Europe wasn't doing commerce with Iran. So it didn't really interrupt things as much as people thought. The closing of the Strait of Hormuz is a mass interruption, because it's not just oil. There are other global goods that travel through that. And that oil has to get out to places like Europe. Because again, oil makes plastics and things that are in products even for China, not just for transportation. It needs that oil for products involving plastics. So what do you think happens, this is just to throw it up and see where it goes, if this is settled in the next week, months, who knows, next month, say, and Iran has kind of been brought back into the world and not as isolated, what kind of an impact does that have on oil? What kind of an impact does that have on markets? I think the biggest thing is any calm is great. Iran, for 47 years, has been the sponsor of over 90% of the funding for global terrorism. To have that taken off the world stage is a sigh of relief for everybody. But if the public can actually step up and take back their country,
they want to do commerce, not chaos. And if they're able to have that and start pumping oil like crazy, hence why Carg Island was left pristine, if they can get back onto the oil worldwide, that'll bring the price of oil globally down. That, again, also the interconnectivity starves Putin of some of his oil profits to help fund the Ukraine war. So, again, there's this interconnectivity throughout. It'll be interesting to see how it all plays out in the end.
All right, the chess game continues. Lots more to talk about, but up next, we'll take a look at markets before the bell. See how things are shaping up on the markets. We start with U.S. futures, and of course, all eyes are on the Gulf right now, and they're hanging on in the green right now, looking to continue the rally of the last couple of days, but it's pretty much a wash. Dow by 0.09, NASDAQ by 0.11, and the S&P 500 0.06, pretty much a wash all the way around. Heading to Asia now, and there was some optimism there. I mean, the Nikkei doing what the Nikkei loves to do, up and down in no small numbers. It was up by 2.87%. The Hang Seng 0.61, and the CSI 300 up by 0.45%. Off in Europe, now they were tracking her up earlier, and they're continue to track up. That optimism from Asia carrying over. You can see the FTSE up by 0.3, CAC 40 by nearly a point, and the DAX by 0.54. TSX yesterday, it intraday pushed up towards 33,000 after dropping down, of course, that record high well above 34,000, but it still ended the day up just shy of 33. It was up by 0.16%, led by the tech sector. So who are some of the movers? Go easy. It has been a yo-yo for them, of course, on that earnings report that just knocked about 75% off their value right now. It was up 13%. ATS up 6.2 roughly. Oceana Gold 5.34, and G Mining 6.36%. Taking a look at the metals. And look at that, gold well below 5,000 right now, 4,900. Silver dipping down, hovering around 78, just above it. And copper is down to 570, off by 1.1%. And oil, yesterday, Western Canadian Select on that rally. It's been on a rally, of course, everything unfolding in the Middle East, but right now it was off yesterday by 0.42%. WTI today, let's see what it's doing. And it's off as well, hovering around 95, just above 95 a barrel. Okay. Iran, of course, is dominating the news, but other things are going on. Lululemon in the market, in the news again. Shares of Lululemon dropping by as much as 2.2% in pre-market trading on Wednesday after the Canadian retailer forecast a second straight year of profit declines, further pressuring a brand that is dealing with product misfires. They're looking for a new chief executive officer. The stock is off 23% this year through Tuesday's close, much steeper than the drop of the S&P 500. Now, for more on the retailer's earnings and what's next for it, we have our guest for the hour, Jeff Hall, Senior Financial Advisor at Manulife Wealth. And Jeff, Lululemon, is that, okay, let's try and find the positive first. Was it a positive hiring the former CEO of Levi Strauss to the board?
Yeah, definitely that. They need some fresh outside perspectives to come in and bring a breath of fresh air and some new ideas. We have a major Canadian icon in decline. This is sad. The numbers you just shared there, you got a company that's down 23% year to date, 48% over 1 year. This used to be a Canadian massive icon doing great business, not just in Canada, but in the U.S. and globally. And it's really fumbled the ball, and it's a shame to see. So hopefully they'll be able to pick their socks back up literally and turn this company around. Yeah,
I mean, it was off in the Americas by 4% again for this quarter. I mean, does it look somewhere else, or does it just have to kind of be reborn?
It has to be reborn. It doesn't mean you have to burn it to the ground and start over, but I always say companies have to innovate or they're going to evaporate. And that's the problem with Lululemon. They got Alo and other companies that come in and they're starting to eat their lunch. And sometimes companies get a little lazy when they're out in front, don't have a lot of competition. They don't really spend their time, effort, in research and development to kind of always innovate and stay at the tip of the spear and the tip of innovation. And that happened to companies like BlackBerry, right? BlackBerry dominated the smartphone market, and then they weren't even looking over the rear view to see Apple and Samsung running over them. You had the same thing with Lululemon. They own the athleisure wear.
Absolutely.
And they were a great product as as well.
It was almost a verb at one point, really, right?
Exactly. And they had all kinds of things. We're doing yoga inside stores, and then they just kind of, sometimes maintaining a company is different than growing a company. You got to get the right people back in and treat it like a growth company and get it moving.
So what do you do with it? I mean, how do you reinvent leisure wear? Like, what can they do? Change stores, change styles?
Yeah, I think this
they
company is more
shoes at one point.
Yeah, I think they got to do more than just some lipstick here. They got to really revamp this company from its DNA, find its soul again, and become a bit unique, and not just be now another brand in a sea of competitors in athleisure. But they've got that opportunity. It's a unique company. It's got some great Canadian roots. They've got an opportunity here to make this company great again. But they got to bring in some fresh blood. So the former CEO of Levi Strauss is a good idea to bring somebody in, different perspective, different supply chain, different ways to distribute, marketing. There's a lot they need to do.
And what kind of a factor is having the former CEO sitting there on the sidelines going, wow, what's going on? Why are we doing this?
Yeah, it doesn't help. And he's a bit of a controversial figure as it is, so he wants to help. He's obviously still and has remained a large shareowner of the company. But it's good to at least have someone there squawking, because again, sometimes the squeaky wheel gets oiled. Mm-hmm. We don't want this company to just slowly die off. It's got to get kind of nudged again from time to time to remind her to get back in the game, get its head in the game, and start making things happen.
Could you see him coming back in?
I could. I think there would be a lot of people that wouldn't want to vote him in, but I think you see that quite often, actually. A founder or a former CEO may loop back to a company. We just had that, actually, I think today, Eisner and some of the others out of Disney will be back out today. Sometimes you see this recycling of CEOs that come back to take a second kick at the can. And part of it sometimes for their own legacy, but that would be someone that could come back in that does know the company literally from the ground up. But if he's going to bring a whole new team of people with fresh ideas, then maybe that could be an alchemy that could be very successful. But again, would I bet on Lululemon? Not right now.
Not right now, not at all. I mean, there's been a couple of other options for CEOs maybe, but how long do you think is it good they take their time on this, or will people start to question the hunt for the CEO?
I think people are going to get a little bit tired. One thing Lululemon used to do really well, they had a CEO that was great at building the brand and having all that inertia and torque and horsepower and getting this company growing and then to the US. Then when it was going to go global, that female CEO at the time stepped down saying, you know what? I've done a great job what she had at the time, but now going global and supply chains all across the globe is a different animal and a different game. It's like going from baseball to hockey. So she decided to pass the baton to someone that was an expert in that area, kind of like with Apple. Yeah. Steve Jobs passed it on to Tim Cook, who is an expert at logistics, as an example, and supply chains. So Lululemon can do that right now. It's okay, what do we need? We need a turnaround expert right now, someone that can refresh a brand, not just here, but globally. So you need someone that also has that expertise in their back pocket to make this happen and turn this company around and hopefully back to its former glory.
All right, we've got to wrap it up there, but lots more to talk about. We'll be back with Jeff Hall, Senior Financial Advisor at Manulife Wealth, to see why the hidden opportunities for investing is on his radar. Time to see what's on the radar for Jeff Hall, Senior Financial Advisor at Manulife Wealth. And Jeff, today we're talking about AI. I know you love NVIDIA. We know you love it, but there's lots of kind of hidden opportunities with everything that's unfolding with AI. But go talk about NVIDIA just for a second this week. Tell me.
Yeah, actually, they have their GTC conference
Yeah.
down in San Jose, which is for all their developers, everybody involved with NVIDIA, all the major companies, Amazon Web Services there, Microsoft, everybody's there. So they get to showcase some of their new technology, including Rubin, which is a new chip that's about 10 times faster than the current Blackwell chip that was 10 times faster than the previous generation. So they just keep gathering partners and just hitting the ball out of the park. People think of it as a chip company, but it's also a software company. And all of AI is coded in CUDA, which is their software. So everyone's building on the platform of NVIDIA. But today it's not really about NVIDIA.
No.
There's a lot of opportunities maybe in the shadows people should consider.
The shadow. No, okay, so who's hiding in the shadows that you think is undervalued or are good opportunities?
Well, there's a lot of different companies that have every aspect. People think of AI as just, you plug something into your computer and out comes this answer that's, amazing that you get. But there's a whole infrastructure behind that to make it happen, whether it's the energy companies that have to produce electricity to actually power the grid, to be able to power AI. That could be companies from Constellation Energy, Bloom Energy. There's a whole array of companies out there. But what if the grid goes down? Like, what's the backup? We can't have, this broadcast or people doing things with companies on the cloud. They need that to never go down. So you need those backup generator companies, the Caterpillar's involved with natural gas and Cummins. So there's all these other ones. But one of the ones I really like actually is a company called Vertiv. Most people never see it. It's not on the public radar, which sometimes is better for a stock. It doesn't get those wild fluctuations up and down the same way when the public's active, very active in a company. But Vertiv is basically kind of liquid cooling at the chip level and the major data centers that are kind of the size of Walmart, but it looks like locker rooms of these GPUs from NVIDIA, look like these stacked Lego cake boxes, row after row after row. You have to cool that because chips heat up and generate a lot of heat.
And they don't like to work then.
Exactly. So Vertiv is kind of like the radiator in your car. It's there to actually cool your engine so it doesn't overheat. And then you're on the side of the road and you can't drive. You need to be able to drive these AI data centers without any issues, without any interruptions. So you need that cooling as a really big factor for companies like Vertiv.
It's not sexy, but it keeps everything going, right? Doesn't it?
Absolutely.
Companies
Absolutely.
like that. And Rolls-Royce, when we were looking at your notes earlier, you said Rolls-Royce, we both kind of, or my producer Paul and I both kind of went, Rolls-Royce, cars? But they do, what percentage of Rolls-Royce is the car, and then the rest is the engines, isn't it? The jet engines and things.
Yeah, so here's the funny part. Rolls-Royce, the car division, which was the toy division of the actual Rolls-Royce empire, was sold in 1998. And since 2003, Rolls-Royce is the car coming off the assembly line are German BMWs.
Yeah.
So they don't. So Rolls-Royce, the company now, is a propulsion company. They do rocket engines, missile engines. Most importantly, you keyed into it there, was off every wing you see on an airliner, that big engine that sends these airliners into the air is mainly RR, which is Rolls-Royce. Their competitors would be GE and Pratt & Whitney. But it's a great company. That way you do the engine rooms for cruise ships, mega yachts for like Jeff Bezos' yacht, so they'll actually do the engine room. But most importantly, people don't know about is they're involved with the small modular reactors, specifically small modular nuclear reactors. And this is kind of the new wave that's coming. There's something that Trump said in the State of the Union that nobody keyed into and nobody stood up and applauded for. He talked about how all the AI data centers are consuming and are too thirsty on the public grid, causing the public to spend more. So he wants them to have their own power generation. And then he just kind of glazed over it and nobody talked about it. But this is where Rolls-Royce could become a major player in the future. These small modular reactors are about the size of a bus, and it can be placed anywhere for a small city. It doesn't need to be next to water. It's the latest and greatest technology. You can guard them very easy because it's it's not like an 800-acre facility for a nuclear power plant. So there's a lot of opportunity even in areas like that.
All right, and I want to get one more in Corning. Glass.
Yeah, Corning, we all know it as our Gorilla Glass on our smartphone screens as an example. It's a great company out of Corning. I remember my mother used to cook with it for casseroles as dishes. That's where it came out of. Then in the internet blow up in the year 2000 as an example. Before that, they were laying all the fiber optic cables to light up those glass cables to be able to have the whole internet flow behind the scenes. And nowadays they do things like Gorilla Glass. The new Apple that will be coming out soon with the bendable, foldable screen is Gorilla Glass. But they still make to this day, similar to Broadcom, they do a lot of that fiber optic cables in those data centers we talked about, joining one GPU to the next GPU, and that to the public to be able to use these cloud centers and that. So those fiber optic cables in glass, taking that 50 years ago, made casserole dishes, and now it's a leader globally, laying thousands and thousands of kilometers a day of fiber optic cable in data centers and across to Europe and back to North America on the bottom of the ocean. Incredible opportunities.
It's come full circle because now you ask AI what you should make for dinner in your Corning cookware.
Yeah, absolutely.
We're going to wrap it up on that note there. Coming up, we're setting the stage for the Bank of Canada's rate decision with Pedro Antunes, chief economist at Signal 49 Research, and our phone lines will open soon for our first call segment. Call us at 1-855-326-6266. You can also send us an email at firstcall@bellmedia.ca. Trans Mountain is planning a series of expansion projects for its main pipeline. The government-owned company says this will allow crude oil to flow faster and tankers to carry more volume by 2027. Trans Mountain says it already exports 60% of its crude by tanker to Asia. War in the Middle East, though, and the U.S. military action in Venezuela are also making the pipeline more valuable. Alimentation Couche-Tard's third quarter profit and revenue were higher than a year earlier. However, they came slightly under analyst estimates. The Quebec-based company says it delivered one of its best quarterly results in more than 2 years as merchandise and fuel revenue rose in the latest quarter. The convenience store operator says healthy fuel margins and increasing loyalty programs engagement are adding to its momentum. Lululemon is forecasting a second straight year of profit declines. The retailer also reported a 4% drop in fourth quarter revenue in the Americas. The Vancouver-based company has recently been facing a backlash for poor quality clothing and campaigns that have soured people. Sales have also been hit by increasing competition from newer brands. Lululemon did not announce a new CEO, but they did add the former CEO of Levi Strauss to their board. And taking a look at the markets, quick turn there. They were in the green when we started the hour, and now they are off by about a quarter of a point pretty much across the board. Well, the Bank of Canada is set to deliver its latest interest rate decision amid mixed signals from the economy. Markets and economists surveyed by Bloomberg are unanimous in saying Governor Tiff Macklem and his council will keep the policy rate at 2.25% for a third straight meeting. The decision comes down at 9:45 a.m., followed by a Macklem news conference. Now, here to discuss what to expect from the central bank is Pedro Antunes, chief economist at Signal 49 Research. Pedro, thanks as always for joining us. Is this kind of the easy decision, and now for the next time they look at it, they're going to have to make they're going to have to factor in a whole bunch of different things?
Well, yeah, I think essentially they're probably already thinking very much about what's coming down the pipe in terms of top line inflation numbers. As you know, we've seemingly reduced inflation below target in the last few numbers. The February numbers came in at 1.8, so that's very good news. But there's a number of things happening that are affecting the inflation numbers, including the carbon tax removal last year and the HST holiday over the holidays. So all of these things are the bank is very aware of. And of course, the big uncertainty here is how long this Iran and Mideast situation is going to go, and what will be, where will oil prices and gasoline prices settle for the month of March?
Yeah, how much could that actually derail their decision power coming up here? Would they be pumping the brakes, do you think? Are they going to be kind of a wait-and-see approach? Because obviously if inflation suddenly spikes back up after they've done such a good job of lowering inflation, is that a major concern? And what do you think the effect could actually be?
Well, I do know that the effect will be, we'll see it immediately. Gasoline prices have already come up in the month, and we're going to see that immediately in the overall inflation. Now, remember the consumers, we've weaned ourselves off of oil and gasoline, but gasoline is still 3% of the basket. So a 20% increase in gasoline prices will lead to 0.6 percentage points right off the bat on inflation. Now, that's the short-term effect. Longer term, of course, it's transportation costs, and essentially the cost of everything goes up when energy prices come up. So that'll play a role depending, again, on how long this situation lasts. But I think the bank will also be very concerned about the impact on inflation expectations. And we saw that back in 2022 when, essentially Russia invaded Ukraine, and we saw a big commodity price hit. But the effect of that lasting effect on inflation expectations was hard to beat back. And so I think the bank will be very, very wary of how this will play out, and how very careful around where they set interest rates going forward.
And what other factors might there be that will play into this? They either could come out of left field or that they're taking a look at now?
Well, obviously the energy shock for Canada as a whole, it's kind of a net neutral because we have, of course, provinces that do benefit a lot from higher oil and energy prices and commodity prices. But for consumers all around, it's negative. So for Canada on a net basis, it's kind of a net neutral. But of course, essentially this, the bank will be essentially worried about the inflation more so than the impact on the economy. That is their number one objective. So I think at best we'll see the bank holding at its kind of neutral rate where it's at right now. Hopefully, the economy will continue to move ahead slowly as we expect. But if anything, I think we may see rate hikes in the future rather than rates coming down.
How much of an impact is wage inflation and some of the services inflation we're seeing among an array of businesses? If you can also maybe hint a little bit on, obviously it may not be a major factor, but AI, obviously, and the displacement of employees and job disruption, how much of a factor could that be in any decision moving forward?
Yeah, well, the wage inflation does play into this inflation expectations piece, and that's what's taken so long to beat back. Essentially, just recently we've seen wages growing at a pace that's more in line with a 2% inflation target. So this is the big concern. It's the bank can't control energy prices, it can't control world import prices, but it can control expectations and hopefully wages. In terms of sorry, the second part of your question was around, AI. Yeah, in terms of AI, yeah, totally agree. We're doing a lot of work, in fact, on the potential disruptions of AI. We're looking at how quickly AI can be adopted, and that's the big question mark. We don't know how quickly the adoption curve for a lot of this technology will be. We do know that it's relatively cheap. A lot of these are cloud-based platforms, and a lot of firms are looking very carefully at this. So I do think we haven't seen a lot of signs yet that this is disrupting labor markets, but I do think that the bank and, in fact, everyone else is looking carefully at how this will play out. And of course, if you get disruptions in the labor market, essentially that's kind of a costly effect on the economy, and that will play towards lowering interest rates or at least keeping rates where they are.
And what kind of an impact, if the bank holds or if they raise at the end of the year, what kind of an impact would that have on mortgage rates? I know a lot of people are looking at renewals this year. Are they going to stay they've kind of disconnected a bit from the Bank of Canada rate? What will happen over the next year with that?
No, I agree. I think there's, in fact, we have seen over the last year and a half interest rates coming down, the bank rate coming down, but longer term yields, the bond market, which is really what affects essentially mortgage rates and borrowing rates for businesses, those have not moved nearly as much, and I think that's going to continue to stay where it's at. In fact, we're worried about how much sovereign debt is growing, not just in Canada, but in the U.S. We've seen the debt load really taking off since the pandemic, and how long bond markets can support all of this debt that essentially governments are taking on. We're not isolated in the bond market. We are going to feel the effects of borrowing by the U.S. and many other countries, developed countries mostly. So yeah, I think even if we do see the bank rate coming down, which I don't expect to see, I don't think unfortunately, there'll be a lot of relief for consumers or businesses on mortgages.
Okay, we have to wrap it up there, but Pedro, thank you as always for joining us.
Oh, you're welcome. It's a pleasure.
Pedro Antunes is chief economist at Signal 49 Research. Still ahead, Jeff Hall will lay out his case for silver, and our phone lines are open. And Jeff's going to answer your questions on American and global large caps. You can reach us at 1-855-326-6266. Email us, first call at bellmedia.ca. Our guest this hour, Jeff Hall, Senior Financial Advisor at Manulife Wealth, sees the silver lining. Ooh, I like that, in silver lining. You like silver, but...
Yeah, I'm a bit concerned because the average public has a big difficulty in getting access to real silver, to actually hold silver as an example. And my biggest concern is I have this kind of echo of 2008's Great Recession with some of the mortgage defaults and the mortgage default swaps and that, where you have this scenario existing today where you have gold and silver, where you have all these paper promises that people own the silver, but when you add up all the silver ever mined, and even all the gold ever mined, and you add up the amount of paper promises people are swapping on markets, it's a big separation from the reality of how much paper is floating out there. So there's a lot of fake fake silver.
How does that happen? How do they allow that to get that far?
I'm surprised because usually there's regulators, you have certain opportunities, but there's a lot of submarkets. Even in China, there's a lot of fraud going on where there's fake silver, where they actually use silver on the outside so someone can do a test and it looks like silver, but inside could just be a piece of iron, but it's very carefully weighted and that to fake people.
Well, jewelers are actually starting to do that. I mean, they're doing it honestly, but they're doing it just to try and save prices for people.
Yeah,
because the cost of silver is going, and gold too, but obviously, but silver as well. Yeah. So how dangerous would that be to the markets if suddenly everybody pulled in their silver papers and said, I want my money? That's
part of the problem right now. So there's a big disconnect. So in China right now, in Shanghai, and a lot of the Asian markets, for actual silver, you actually get about a lift of maybe even 20% over the paper silver in North America. And silver can't just be mined overnight. And it's actually a poor man's gold. They call it still a currency, but really it's used for a lot of industrial uses.
Well, that's a lot.
It's used for AI data centers, which is why Trump wants it and put it on the rare earths list that he has for critical minerals. China has now banned the export of silver because they want it because they're the major producer globally of solar panels. Silver is the key ingredient there. And now you add South Korea to the mix. Samsung has invented a new electric vehicle battery that goes about 90% further than a Tesla battery and charges in just 9 minutes. Key ingredient, silver. So there's all these sudden industrial uses. And it's not as if there's silver mines out there you can just like turn up production because silver is not usually... There's not mines necessarily of silver as much as it's a byproduct of other mining you're doing. You come across silver and kind of collect it as you're going. Yeah. So it's not very predictable. And all of a sudden, everybody wants it. And then you got the public and investors wanting to jump on the bandwagon at the same time because they know there's a supply disruption and the world's not producing enough silver for demand for actual industrial use. But that disconnect between the paper price in the U.S. example on COMEX and others versus Asia. What's happening now is the Asians are buying a lot of the large paper promises here and demanding delivery of this silver in Asia. So eventually these vaults are going to run dry because there's so much paper out there saying and claiming they own silver. So investors got to be very careful if they're going to go that route. Make sure that they have are using companies or exchange traded funds that actually have serialized silver bullion that's actually audited independently. It's sitting in a vault. It's not just a paper promise that connects to the next paper promise. You get this domino effect of these paper pirates out there.
And is there enough silver is there enough silver out there in the grounds like to meet demand or?
It's tricky.
I imagine it's like most mines. What is it? 10 years from when you have, hey, let's start this mine, and it's 10 years before you actually are pulling something out.
You're actually bang on. Actually, it's the time it takes to put permits and finally get a shovel in the ground. It is about 10 years, and that's too far. The metal's needed now with all these new things. Also, missile technology. Missiles have a lot of silver inside. There's a lot of missiles that are being consumed right now. So there's all this sudden demand for silver. It's outstripping supply very quickly. And then when you add that investor layer to it, that's again, like we mentioned earlier, it becomes a bit dangerous. So the public's got to really, really be careful because you just don't know what the government's going to do next. And the one other thing other than the paper promises that make me nervous is the fact that there's government interference. They're changing the rules mid-game, especially on the little investors. They're actually crushing them because a lot of big firms out there were shorting silver and kind of needed to be rescued a bit at the expense of the little guy out there. And that makes me very upset. So they're literally changing rules, regulations mid-game. It'd be like watching hockey, and then the referees every period are changing how hockey is done and what the rules are. And
trying to keep up.
And then how does the public keep up? And a lot of it was done with margin, the certain marginability. If you brought your block of silver here today and you brought it, you're allowed certain marginability. But also it's like, oh, we can't have that much margin. And a couple of days later, oh, no, you can't have that much margin. So now you're being a forced seller of silver, maybe when you don't want to. Yeah. So I think it's very dishonest. And when I see that, so you're getting that even with some regulators out there, mainly in the States, and you're getting that in the markets as well. People, buyer beware.
Okay, got to wrap it up on that note there. But still ahead, we'll take a look at some of the notable analyst calls and recommendations moving the markets, including Netflix. Let's take a look at some of the notable analyst calls and recommendations. First up, Netflix shares are up about 1% in pre-market trading. Oh, okay, they're up by 0.2 now. When we wrote this, they were up 1%. Citi resumes coverage with a buy rating, noting that it expects the streaming giant to hike subscription prices in the U.S. Analyst Jason Bazinet says the rating also reflects scope for the company to increase its FY26 EBIT forecast and announce larger share repurchases. PT set to 115 implies a 22% increase from last close. Constellation advancing in pre-market trading on Wednesday after Citi raised the recommendation on the beverage company to buy from neutral, citing a beer top-line acceleration and a valuation that is below historical levels. Analyst Filippo Falorni expects a return to positive depletions in 4Q after 4 quarters of negative depletions, with an estimated increase of about 0.5% versus consensus at negative 1.5%. PT increased to 175 from 155, implying a 15% increase. And last up, Starbucks Core shares are down in the markets, the pre-markets right now, 1.47%. RBC Capital Markets downgrading the company to sector perform from outperform. Analyst Logan Reich citing ongoing labor and additional future investments, which makes it tougher to justify the outperform. Permanent labor investments plus net cost savings over the next 3 years are smaller than we previously anticipated, implying further investments required, while improvements to U.S. top-line growth are well appreciated. PT 105, the stock up 16% this year as of last close. When we come back, Jeff Hall, Senior Financial Advisor at Manulife Wealth, takes your questions on First Call. Time for First Call, and for that we go to Bill from Bowmanville. Bill?
Thank you for taking my call. I'd like your guest thoughts on Constellation Software. I've held it for a long time, and I've done very well, but I'm getting very nervous. I'd like to hear what you have to say. Thank you.
It is the interesting one right now, isn't it?
Yeah, that's a long history of success, and it's just been fumbling the ball lately and having a lot of struggles. It's down, I believe it's probably down about 44% in the last year or so. So yeah, there we go there. So it's had a lot of difficulty in it. You got to always be careful too. Sometimes you got to separate a business from the stock. Sometimes a business can still be doing well, but when investors start to lose faith and start to sell off the company, you get this kind of this domino effect where it causes the stock to go down. So more people get nervous, they sell off, which brings it down. You get this kind of this self-fulfilling prophecy that way. So again, it's a decent business, but I'd be very careful. I don't own this one. Again, they've got some great technology. Usually they're doing some acquisitions to tuck into their business. They've fumbled some of those. So I think it's a company I'd be very cautious with. Again, I don't know your personal circumstance, but if you have a large capital gain, that might have you hesitate a bit to want to trigger that. But if you're just a little bit into the stock and don't have much of a gain, you might want to think about placing money elsewhere for safety. All right, let's head to some emails. And this one is from Mike and says, "Good morning, Roger and Jeff. Thanks for all your commentary and insight. Do you have a preference between GE Vernova or Comfort Systems USA the next 2 or 3 years, or do you consider both too overbought at present? Thank you." Now, both have been actually doing really well. They've been actually on a bit of a tear upwards, both doing very well. Very different. I wouldn't say they're in the same arena, but doing things very differently. GE Vernova was a spin-off from the major GE corporation a number of years ago. They specialize in things and everything from wind turbines and all kinds of different forms of energy, where you've got the other one that specializes in things like HVAC, plumbing for Comfort Systems as an example. So they're kind of in the same arena, but they're doing different things. Actually, overall, Comfort Systems has been the one that's actually performed a bit better. And also even things like the AI data centers that are out there. They need all kinds of help with cooling, like we talked about earlier with companies like Vertiv and that. So you have opportunities where these businesses are going to be needed more and more. But the whole energy sector for both of those businesses should actually succeed in the future based on the fact that those thirsty AI data centers for the cloud need more energy. In the U.S., power grid is frail and fragile and always almost near its peak and always almost teetering into black and brownout territories. So the more companies that can get involved with generating through wind power, solar, small modular reactors like we talked about earlier, anything like that to help fortify the grid, and also as a target for terrorism and other nation states like Iran. You got to be careful that these things can be hit by cyber. You need those backup plans. And all governments need multiple sources of energy to secure it, and frankly, for global and public security as well. So these companies can be very important. I like both of them generally. I don't own either of them personally, but I think both are interesting businesses, and they're both actually firing all cylinders. Both are well run. Okay. And we'll go to an email now from Margaret. I would like to ask for the guest's opinion on Power Corporation, please. The stock has dipped. Any reason for this? Is now a buying opportunity? So Power Corp is an interesting one. I think they just hit their 101-year anniversary of the business. One family out of Quebec controls a majority of that company. It's a way to kind of play the financial services sector. They own companies like Great-West Life Insurance. They own the former company that used to be called Investors Group. People a long time ago might have been familiar with. I don't own the company, but it's a way if somebody wanted to participate with it. I think there's other ones that would be better to possibly buy if they're looking for something in that arena. The stock has been fairly stale. But it's a business that should do okay in the future. But again, one of the benefits of having such a strong financial services sector in Canada, I would suggest also, though, to this viewer, consider globally. You're not limited to just Canadian financial services companies, banks, or financial institutions. The whole globe is your oyster. There's a lot of great stuff south of the border in the United States that are far bigger than Power Corp, much more stable than Power Corp, that could be an option, or even diversify. Get a few of these companies like that, maybe some in the States, and she can still hold Power Corp if she really liked that business. But overall, I don't own that one. I think there's better ones out there at this time. But at least she's fishing in the right ponds.
What do you think of companies, family-run companies? Do you like them? Stay away from them?
Actually, I don't mind them. Most people don't like them. I like when a family has really owned that company and some of the founders, or at least the second generation, is still partaking. When you get to third, fourth, fifth generation, they start to lose the passion for the business. Then they're maintaining a company. They don't have that growth initiative that's there in most cases. But sometimes it's not bad because then the public float isn't as much. So there's a smaller float of shares the public can buy. So it makes it more desirable sometimes. When people do want to pile in, there's just not that amount of float available because one family may control a big chunk off the table, as an example. Where I do get worried is where founders have a controlling vote on everything within the company and the board. And sometimes companies do that, whether it's Google and others, where there may be a certain class of shares.
Got to wrap you up there.
Yeah,
we're out of time, Jeff. Thank you as
you.
always for joining us. Always a great conversation. Jeff Hall, Senior Financial Advisor at Manulife Wealth. Lindsay Viscaya is up next with the Open. Trading starts in 30 minutes.